Are you determined to start investing this year? Making a fortune in the stock market is a long and slow process that requires discipline and endurance. You can't expect to have good results if you're making common beginner mistakes. There are plenty of sources telling you what to do. Be sure to consider what not to do, also. In this video, I will share 8 mistakes beginners investors make. For your best results, avoid these common beginner investing mistakes. Mistake 1. Failing to do your due diligence. Too many people treat an investment like a lottery ticket. Avoid making investments that rely on luck for success. Carefully research and compare possible investments against other investment opportunities. An investment is your best educated guess. Do you possess the necessary knowledge to assess stocks, bonds, and mutual funds? The information you need is out there. Be sure to do your research before committing your money. Mistake 2. Having an unreasonable timeline. A great return is a couple of % above the market return. That's not enough to get rich overnight. Make long-term plans and invest appropriately. Huge stock returns are possible, but virtually impossible to capture consistently. Keep a long-term focus. Mistake 3. Listening to friends, family, or strangers. Every investor thinks he has a unique understanding of the stock market. These people may mean well, but unless they are financial advisors. Do your own work and reach your own conclusions. Avoid being impulsive and only use stock tips as possible companions to research. Mistake 4. Holding on to losers for too long. At one time or another, every investor has said, it can't go any lower. Even large companies have gone bankrupt, and the stock price fell to less than $1. Only stay in a falling stock if you have reason to believe the price will rebound. Avoid being too proud or stubborn to throw in the towel. Mistake 5. Selling before it's time. Just because your stock is already up by 20% doesn't mean it can't still go up higher. Many stocks have gone up 100-fold or more. How can you be sure yours won't too? Analyze the price and determine if it's justified. Make your decision from an informed place. If you're liking this video so far, hit the like button, it helps the channel reach more people. Mistake 6. Failing to diversify. On one hand, you have famous investors saying things like, diversification is only important if you don't know what you're doing. On the other, you have experts claiming you can't be too diversified. Just remember, the more diversified you are, the less likely you are to lose a lot of money. It's also true that you'll be less likely to make a lot of money in the short term. The more diversified you are, the more your results will mimic the market, which in the long run has shown to be better than picking individual stocks. Mistake 7. Investing without a plan. What are your reasons for investing? Retirement? Home purchase? College tuition? Knowing your purpose will help you determine an effective plan. Before putting your money into the stock market, you should know what goals you have for your money so that you know when you have achieved them. Mistake 8. Failing to monitor your investments. Your work isn't done once you purchase a stock or an index fund. You might pick the perfect bond or stock purchase today. That doesn't mean it's still a great investment 2 years from now. Stay on top of your investments and continue doing your research. The common beginner investing mistakes are well known, yet beginners continue to make them. Avoid common investing errors and you can expect uncommon results. Take your investing activities seriously and spend time each week reviewing your investments. Determine your purpose for investing and make a plan. You'll be more pleased with your results. Thanks for watching this video. If you enjoyed it, then like the video and subscribe for more content like this.